Hello and welcome to this week's edition of the Clinton Howell Team's Weekly Market Update. I'm your host, Clinton Howell, broker with RE/MAX Escarpment Realty. Today is Wednesday, October 23rd. I have with me my good friend and colleague, Jeffrey Lewis. He's a licensed insolvency trustee with Taylor Lebo, and we've got some questions for him today. Big announcement, first of all, though, from the Bank of Canada today. They've lowered the overnight rate by 0.5%. 50 basis points. This is the first time for an interest rate drop this size since the pandemic. Prior to that, the last time we saw a 50 basis point drop was in the 2008-2009 timeframe. This will be the fourth rate cut from the Bank of Canada this year, and this jumbo cut is welcome in terms of their monetary policy direction and will hopefully start to bolster the softening economy and at the same time stimulate activity in the real estate market. So, I have a few questions for Jeffrey about his take on the current health of the economy, the financial well-being of homeowners in the face of mortgage renewals, and also want to get his thoughts on this Bank of Canada announcement today. Jeffrey, thank you for being with me today. I appreciate it.
Thank you.
It's fantastic. And so my first question for you is I'd love to hear your point of view on the health of our current economy in light of the Bank of Canada's key interest rate drop today. Your thoughts on what the coming months and coming year have in store from your point of view for your clients.
Thank you, Clinton. So in insolvency, 95% of the people that we see don't own real estate. What that means is that most of their debt tends to be unsecured credit cards, some fixed-term bank loans, payday loans, and so on. They tend to be fixed interest rates. So for them, the drop in interest rates isn't going to have any really effect on them. From a cash flow perspective. They're already deep in debt. So, but I can see that from an economic perspective, and that's obviously it's a huge drop in interest rates. In historically, 50 basis points. It's going to have a knock-on effect. So, we have clients that are struggling to find work. Employees aren't employing as many staff. They're perhaps not as abundant with their workforce because of their cash flow difficulties, and they're having to pay their internal loans as well. So, any money that they can free up to help them to take on more staff and to help boost their business is obviously going to be welcome from our clients' perspective.
Okay, great. Appreciate that insight. So just to recap there, you think it's going to be a positive change for the economy that could help your clients in terms of employment, help the companies to ease some pressures from them. But in terms of clients that are already sort of deep into their financial situations, it may not be a very important piece of news for them.
Of course, and then the other thing you have to realise is that it's not like turning the tap on and off when you change interest rates. So if you have a variable mortgage, obviously yes, your payments will go down almost immediately. But the effects of the changing things in the economy that we see in our office, it takes years for people to maybe 1 to 2 years for people to feel the effects of what's happening and then decide to come and see an insolvency trustee to get help. So. If they do have variable loans, they're already in debt. So, it's going to take them a while to sort of work through that.
Excellent. Okay, we've got a follow-up question here for you. So RBC suggests there's 2.2 million mortgages that are coming up for renewal in Canada in 2025. Do you think this is going to have a major impact on the financial health of homeowners this coming year with the new rates? Do you expect to see a lot more people coming through your door in 2025 from this fact?
Well, I can tell you that the people that come through my door that own real estate, they in the last year, maybe even 2 years, they've been panicking. So they've had historically very low mortgages. They fixed at maybe 1 or 2% 4 to 5 years ago. They see the writing on the wall that the rates have gone up enormously, and and they really didn't know what to do, because when you have to pay your mortgage, something's got to give. And so what will happen is you'll end up you get into unsecured high interest debt. Welcome news for them, obviously. So we do file proposals for people where they have unsecured debt and equity in their house, but this may avoid them having to do so if they can refinance and bring their budget more into key with their income.
Yeah, sounds good. In terms of proposals, and we've talked about this before, but I think if someone is struggling in a financial situation, tell us a little bit about proposals in terms of how a proposal could help someone get back on their feet, and how that's much more advantageous to going bankruptcy, for example.
So a proposal is actually a very good product. It's a method to deal with your creditors and get legal protection without having to file bankruptcy. So in other words, you get the protection of a bankruptcy without having to be bankrupt. Okay. And what it means is that through a trustee, we come to an agreement with the creditors, and we take all the debt, put it into one. The creditors vote to accept, and generally it results in a payment of much far less than the face value. So a typical proposal would be anything between maybe 20 and 30% of the debt that you'll pay back. And it's a regular payment over 60 months. So we'll take the agreed payment, divided by 60, you make a regular payment to the trustee. The big thing is that all the interest stops. And that's, when you talk about interest at minimum 20%, and we've seen loans up to 40% in some cases, it's a huge difference. And it really does allow people to get their financial life back when they were struggling and just couldn't see any light at the end of the tunnel.
Well, that's great. So this sounds like a really fantastic approach for people that are in that situation. And
Absolutely.
I thank you for joining me today, my friend.
Thank you, Cliff.
Yeah.
My pleasure.
Now for our local market updates. What's happening in Burlington? We'll start there. 652 active listings, which is slightly up from last week. 192 sales in the past 30 days, which is relatively unchanged from a week ago. 3.4 months worth of supply, also relatively unchanged. We're looking at an aggregate sales versus new listings ratio of around 49%, which is a very balanced market, actually. This has been improving. We've gone from 37% a couple weeks ago up to 49% in a short time. We are seeing some differences between the property types, very balanced in the detached homes and with regard to the row houses, townhouses, but semis are really outperforming. They're a seller's market at 87% on the sales versus new listings ratio, which is a very high number right now currently. What's happening in the Hamilton area? We've got listings are up, 2,223 active listings, up from last week. 460 sales in the past 30 days, which is relatively unchanged. 4.8 months worth of supply, which is up slightly from a week ago. Absorption rates are a bit lower in Hamilton at 41%, which is indicating a bit more of a buyer's market condition in Hamilton. And we don't have that same phenomenon going on with semis that we do in Burlington in the Hamilton area. Average days on market, relatively unchanged from where it was last week. In terms of the Oakville area, we've got 602 active listings, which is up from last week, and 118 sales in the past 30 days, which is actually down. And as a result, we've got more supply there now, 5.1 months worth of supply, which is extremely high. And the aggregate sales versus new listings ratio is sitting very low in the buyer's market territory at 36%. The only category that's really operating in a balanced fashion in Oakville is the semis. They're at 50%, semi-detached homes. Townhouses are at a close second at 45%. But overall, we're seeing a buyer's market condition in the Oakville area. Days on market unchanged, median 18, average 28. And that's all I have for you today. Hope you liked the update. Please reach out if you have any questions. Thank you.